My name's Matt from Crypto Art Australia, back for another update. The last update I put out was in June, around the high 30s for Bitcoin and the markets. And I thought today was a timely update for you because there have been some developments. And I think it's really important to know the different scenarios that I see anyway, that might resonate with you. So looking at the last update we put out in June, we were around the high 30s, and I did say that, look, because we've had that significant correction from 65k, and we had the pi cycle top indicator telling us that we actually did have a significant downside. We have seen that all the way down to 28k, and now we looked, and I said in June that we're looking now for a B wave, and that B wave could take us anywhere from 42k to 50k. Now we've obviously gotten higher than that. We've gotten 53k. Now we're seeing a significant correction, and as of this moment, I believe Bitcoin's at 41.3k right now. So that's our live price. What we are actually seeing on the charts is the formation of a triangle, and I don't actually think it's the end of the bull run. I actually think it's a very good opportunity. But with that opportunity, we need to limit our risk, and we need to know what are the definitive scenarios to help us manage that risk. So the first scenario I'm looking at is potential bottom. So we have the boundaries of the triangle. Symmetrical triangles usually are a continuation pattern. So if you have an up move, on the higher time frames, which we've seen the bull run, we have a correction, and then we have a continuation. Usually a symmetrical triangle is a continuation pattern, but it can break out in either direction, about 60-40%. So 60% in the same trend, so that being up, and 40% probability moving to the downside. So we need to make close eye on this, the boundaries of this triangle, which are at 65k, 53k. We've seen a 28k bottom as well. So the next logical bottom would be around 34k. Anywhere between 34 and 37k would be my absolute limit. And I'll be buying some coins down there. The reason I say coins is because the market is ruled by Bitcoin, and I'm not looking at any other charts at this moment except Bitcoin, because we are seeing a correction, and we've seen a top. We have seen a major top, and the major top being 53k. If we get down to 34k, that is a major correction. It's not a bear market. It's a major correction. So that is my plan. However, I'll be managing my risk, and everyone should be doing the same. If we do get that 34k, we need to consider, okay, we need to be very careful with our portfolios. What are we going to do if we break down? Okay, on the weekly or the daily chart, we break below 34k. This is the scenario that I'm looking at. So obviously, first scenario would be the bullish scenario, buying around 34, 37k, and then breakout potentially late October to new all-time highs, anywhere between 80 and 100k is what I'm looking at. But the second scenario that I'm looking at, which is less likely at this time, would be a break below 34k, and then we are looking more at a descending pattern here, where we have lower highs upon lower highs and lower lows. If we do get that, the most logical areas for our bottoming action would be around 28k, all right, which is our previous bottom. If we break below there, there's a high chance that we move into the mid-20s and potentially 20k as well, okay, before any significant bounce. However, we also can see on the weekly chart, that is the most important chart that you can be looking at right now, because the weekly chart right now tells the story, the picture that we all should be looking at. So the weekly chart is the one that I'd be asking you to look at particularly. We have this this top, after the significant B wave move, and now we're getting pressure down, volume pressure, sell pressure, and we are currently below a really key moving average, which is the 21 weekly moving average. If we see that sustained drive down, okay, down to the 34k, and we don't get a wick up or buying volume up, potentially we could see a cross of the 21 weekly moving average and 50 week moving average, and from there we're going to see significant downside. Okay, and just a shout out to Crown's Crypto Cave, who talked about the other day on his channel that the quarterly candle, which is the 3-month candle, is closing on the 30th of September. And if we see a wick below the previous candle low, which is at 28k, potentially we could see more sustained downside. But if we close above there, which is 28k, then we are looking good to continue our uptrend. So you need to be looking at keeping a close eye at the end of the month on what's happening with that 3-month candle, what's happening with the weekly candle. Has the weekly 21 EMA crossed to the downside? Are we seeing sell pressure down? So you really need to take it one step at a time, but really keep your eye on that weekly chart, the 21 EMA, and the 50-week moving average as well. Please keep a close eye on that. I'm still thinking that this is the most likely scenario here, moving up to the breaking out of that triangle in October sometime, but anything's possible, and we need to be prepared for either direction. Okay, but those are our two scenarios there. Now, going back to the 21 EMA, we have seen in the past, I'm just going to move myself over for the moment, we have seen in the past corrections, significant corrections, when we've crossed these two moving averages. And we go back to 2018 to look at that. Now, June 2018, we had that cross, and we had a 50% correction. Okay, so a significant correction that took a number of months, pretty much until the end of 2018 before we recovered. And that was one example there where that 21 EMA cross really gave us some significant headaches for a number of months. 21 EMA cross in 2020 was significantly shorter. It wasn't a 6-month recovery. It was actually a couple of short months. Back in March of 2020, we had that dump, the Rona dump, we call it, where we had the 21 EMA cross to the downside, and we had a 60% correction. So if we're following this trend of significant corrections with that cross, potentially we could be looking at 20k, all right, and even in the teens. Is that likely at this moment? No, because we still have an uptrend on the really high time frames. We have that bull trend still intact. But if we get that closure below 34k and then we get another closure below 28k, then we are looking likely to go to 20k and into the teens as well. Back in June, if you remember, with the video that I put out, I did say we could actually see as low as 14, 15k based on the correction that we saw last year, the 60% correction. That's less likely this time, because we do have the boundaries of that symmetrical triangle that has been printed on the chart, but we still need to be watching that very closely. And I would just be saying at this moment, with the price where it is right now, we can just have a look really quickly. We are currently sitting at 41.4k. So really crucial time to be looking at that weekly chart. Really good time to start looking at your portfolio and considering to take profits if you haven't already, because once we get that 34 to 37k area, which I think is highly likely, there'll be a lot of buying down there, and we'll need to see the reaction. Nothing's decided, nothing's set in stone, but I do think probability is a bit higher for that to be our bottoming area for the bull run. but we have to wait and see. And if we do get that cross on the weekly, we could be seeing more significant downside. But I'll keep you updated. And thanks for listening, guys. And I hope that has helped you with your analysis of the markets and of Bitcoin being the leader of the markets. And we'll see you again soon.